Hi traders, it's Roberto, and this is an introduction to our mentorship program series. If anyone's interested in joining us and becoming part of the mentorship program, this is a taste of what you would receive. We offer one-on-one coaching sessions, a 6-month program, and lifetime membership programs. And you can just log on to FX Northwest Institute and check out the programs that we offer. We also offer a trade copier program. So let's get started. I'm going to show you different indicators, or different ways you can use indicators to determine directional bias. Okay, so the first one we're going to use is a simple moving average line, 21 moving average line, pivot points, trend line breaks, and we're going to use MACD for also to help us with buy and sell triggers. So the first thing I see is here, price has been in an uptrend, and then we draw a simple move trend line, and notice that the price broke below the trend line and broke below the central pivot point, and is below the price is below the 21 moving average line. This is MACD, so there's a crossover, two-line crossover. So that's our confirmation that this trade is going to turn around and head south. So as long as price is below the central pivot point, below the 21 moving average line, a trend line break. Here we had a color change candle. So we have a lot of reasons why we should be taking this trade going south. And we're looking at a 1-hour chart. We're only interested in intraday trading. We're not looking at long term right now. Just what is going to happen for today. The market put in about 132 pips. This is the London close, and this is where we would exit this trade for today. Okay, so the market broke a trend line, broke the central pivot point, 21 moving average line, MACD crossover, two lines are going, so we definitely take this trade and exit before the New York close or London close. Okay, now I'm going to show you a different trending indicator that would give you more of a confirmation or a different confirmation. We're going to use Ichimoku indicators, which is a trend indicator. They're the same as candlestick patterns, or rather candlesticks, but these candlesticks can be used to identify trending periods, potential reversals. Okay, so here we see the same exact thing. Instead of regular candlesticks, we're using Ichimoku. And again, we have a crossover in MACD. That's our confirmation. We have a trend line break. And the colors are going from bullish to bearish, from blue to red, and price is below the the central pivot point. And the way we trade with Ichimoku, as long as the candles stay the same color, we stay in the trade. Notice that MACD crossover lines are angle and separated going down, and it's not until it starts turning blue, this is where we think about exiting, right there. Okay, so here, before price broke below the trend line, we were in an uptrend. We had blue candles, slight retracement, but bullish candles. Then what happened? We had colors changing to red, broke the trend line. That's our confirmation that this trend is over. Broke below the central pivot point, more confirmation that the market's in a downtrend. We stay in this trade as long as these candles stay red and then start getting out of the market. We exit the market actually, and the lines start turning blue. So that's another way you can use different trending indicators to determine entries and exit. Okay. The last one is the Ichimoku Indicator. Okay, Ichimoku Indicator, very simple. When price is below the cloud, we sell. When it's above the cloud, we buy. Okay. Now on this first trade, I would have not taken the trade based on the Ichimoku Indicator because obviously price was still above the cloud. I would have traded based on price action, and I would have taken this trade, two lines, a MACD crossover. We have a trend line break. We have a color change candle, and based on price action, we have a color change. Price broke below not only the central pivot point, which is, I'm sorry, it's a different color here, but if you notice this shaded area where it says P, That's a central pivot point. So as long as price is below the central pivot point and MACD lines across the crossover, these two lines cross to the downside, then the market should trend down, and it did. And then here is when we would have gotten out of the trade right there. Now in this chart, which is a little bit way too busy, but I just put all these charts, all these trending indicators just to prove a point, how they all just work the same. Okay, here we have Heikin Ashi indicator turning from bullish to bearish going, and then we have pivot point, we have price below the central pivot point, and we have this black line which is a 21 moving average line. So again, we have Heikin Ashi, we have red, a trend line break, price below the central pivot point, 21 moving average line. This would have obviously we would not have used the Ichimoku indicator to confirm a directional change, but here we would have. Right there we had 21 moving average line, we have Heikin Ashi turning from blue to red, trend line break, crossover on MACD right there. And as long as price is below the Ichimoku cloud and prices is still Heikin Ashi candles are red, you can stay in this trade as long as these candles don't change and stay red. Here we had a slight retracement also here, but you've noticed the two lines in MACD crossover lines, they stayed separated at an angle. Okay, so that's it for the introduction on the mentorship program. If you're interested in joining us, you can log on fxnorthwestinstitute.com. We offer several programs: trading signals, trade copier. We have 6-month long one-on-one coaching sessions, which includes the trade copier, and we have a lifetime membership, which includes everything, and our programs are available. So log on to a website and join us. So that's it. Have a good weekend, and see you next time.